Today is Saturday, August 6, 2022. Let us take a look at today's crypto headlines. Ethereum price rises by 50% against Bitcoin in 1 month, but there's a catch. Bitcoin bulls aim for $25,000 price on Friday's $510 million options expiry. Senator Stabenow, Guzman introduced crypto bill that extends CFTC's regulatory powers. Bullish rate hike, why crypto spiked today in the face of bad news. Inflation punishes the prudent while Bitcoin gives future hope, Jordan Peterson. Please like, subscribe and turn on the notification button to keep supporting our channel. Ethereum price rises by 50% against Bitcoin in 1 month, but there's a catch. The rise in the ETH/BTC pair is painting a bearish technical pattern, hinting at a potential correction. Ether, Ethereum's native token, has been continuing its uptrend against Bitcoin, BTC, as euphoria around its upcoming network upgrade, the merge, grows. ETH at multi-month highs against BTC. On the daily chart, ETH/BTC surged to an intraday high of 0.075 on August 6, following a 1.5% upside move. Meanwhile, the pair's gains came as a part of a broader rebound trend that started a month ago at 0.049, amounting to approximately 50% gains. The ETH/BTC recovery in part has surfaced due to the merge, which will have Ethereum switch from proof of work, POW, mining to proof of stake, POS. Ethereum's rising wedge suggests sell-off. From a technical perspective, Ether stares at potential interim losses as ETH/BTC paints a convincing rising wedge. Rising wedges are bearish reversal patterns that occur when the price trends higher inside a range defined by two rising, converging trend lines. As a rule, they resolve after the price breaks below the lower trend line by as much as the structure's maximum height. Moreover, a declining volume and relative strength index, RSI, against a rising ETH/BTC further increases bearish divergence risks. This gives weight to the wedge's bearish setup for a target of 0.064 BTC, or down 11% from today's price. Ether looks stronger versus dollar. Meanwhile, technicals paint a brighter picture for Ethereum against the US dollar. The potential of a 10% breakout for ETH/USD looks strong in August due to a classic bullish reversal pattern. On a 4-hour chart, ETH/USD has formed what appears to be a double bottom. This pattern resembles the letter W due to 2 consecutive lows followed by a change in direction from downtrend to uptrend, as illustrated below. Meanwhile, a double bottom pattern resolves after the price breaks above its common resistance level and, as a rule of technical analysis, rises by as much as the distance between the first bottom and the resistance. As a result, ETH could rally toward $1,940 in August, up 10% from today's price. Bitcoin bulls aim for $25,000 price on Friday's $510 million options expiry. BTC price has been gaining momentum as it nears $24,000, and this week's options expiry could help bulls profit $200 million. 51 days have passed since Bitcoin, BTC, last closed above $24,000, causing even the most bullish trader to question whether a sustainable recovery is feasible. However, despite the lackluster price action, bulls have the upper hand on Friday's $510 million BTC options expiry. Investors have been reducing their risk exposure as the Federal Reserve raises interest rates and unwinds its record $8.9 trillion balance sheet. As a result, the Bloomberg Commodity Index, COM, which measures price changes in crude oil, natural gas, gold, corn and lean hogs, has traded down 9% in the same period. Traders continue to seek protection via U.S. Treasuries and cash positions as San Francisco Fed President Mary Daly said on August 2 that the central bank's fight against inflation is far from done. With that being said, the tighter monetary impact on inflation, employment levels and the global economy are yet to be seen. Bearish bets are mostly below $22,000. Bitcoin's recovery above $22,000 on July 27 took bears by surprise because only 28% of the put, sell, options for August 5 have been placed above such a price level. Meanwhile, Bitcoin bulls may have been fooled by the $24,500 pump on July 30, as 59% of their bets lay above $25,000. A broader view using the 1.60 call-to-put ratio shows more bullish bets because the call, buy, open interest stands at $315 million against the $195 million put, sell, options. For instance, if Bitcoin's price remains above $23,000 at 8 a.m. UTC on August 5, only $19 million worth of these put, sell, options will be available. This difference happens because there is no use in a right to sell Bitcoin at $22,000 or $20,000 if it trades above that level on expiry. Bulls might pocket a $200 million profit. Below are the four most likely scenarios based on the current price action. The number of options contracts available on August 5 for call, bull, and put, bear, instruments varies, depending on the expiry price. The imbalance favoring each side constitutes the theoretical profit. Between $20,000 and $22,000, 100 calls versus 3,700 puts. The net result favors bears by $75 million. Between $22,000 and $24,000, 1,400 calls versus 1,600 puts. The net result is balance between call, buy, and put, sell, instruments. Between $24,000 and $25,000, 3,800 calls versus 100 puts. The net result favors bulls to $90 million. Between $25,000 and $26,000, 0 calls versus 7,900 puts. Bulls extend their gains to $200 million. Even so, this oversimplification disregards more complex investment strategies. Bears have less margin required to suppress Bitcoin price. Bitcoin bulls need to push the price above $24,000 on August 5 to secure a $90 million profit. On the other hand, the bears' best-case scenario requires pressure below $22,000 to set their gains at $75 million. However, Bitcoin bears had $140 million leveraged short positions liquidated on July 26 to 27, according to data from CoinGlass. Consequently, they have less margin required to push the price lower in the short term. The most probable scenario is a draw, causing the Bitcoin price to range between $22,000 and $24,000 ahead of the August 5 options expiry. Senator Stabenow, Guzman introduced crypto bill that extends CFTC's regulatory powers. The bill defines digital commodities and requires registration of digital commodities platforms by the CFTC, with language that needs tightening. United States Senate Agriculture Committee Chair Debbie Stabenow and Ranking Member John Boozman introduced the Digital Commodities Consumer Protection Act bill on Wednesday. The bill has been expected for several months. Like the Digital Commodities Exchange Act, SIA, introduced into the House of Representatives by members of the House Agriculture Committee in April. The new bill enlarges the role of the Commodity Futures Trading Commission, CFTC. The new bill is not the companion to the SIA, however. According to the summary, the bill's definition of digital commodities includes Bitcoin and Ether and excludes certain financial instruments including securities, which are regulated by the Securities and Exchange Commission. Second, the bill mandates registration by the CFTC of a broad spectrum of market players, such as digital commodity broker, digital commodity custodian, digital commodity dealer and digital commodity trading facility, which are collectively understood to be digital commodity platforms. Digital commodity platforms could be cross-registered with the second under the bill. In addition, the bill would require the registration of associated persons of digital commodity brokers and digital commodity dealers. The bill was met with wide approval within the crypto community, mainly on Twitter. Blockchain Association policy head Jake Chervinsky called it a good bill overall and confirms a growing consensus for CFTC regulation. Coinbase Chief Policy Office Faryar Shirzad said he was really pleased to see the introduction of the bill. CFTC Chair Rustin Bainum released a statement saying new legislative authority is needed to clarify ambiguities and provide a regulatory framework to the digital commodity market. The general accolades were not without notes of caution. CoinCenter released a blog post expressing gratitude for the careful approach to developing this legislation but cautioned, "We have reservations about the breadth of definitions for regulated activities. And we believe there is a need for a clearer exemption of persons engaged in constitutionally protected activities such as publishing software." The SIA also addressed digital commodity registration but left it up to the platforms to register with the CFTC or remain subject to state registration. Patrick Dougherty, head of the digital assets practice at Foley & Lardner and adjunct professor of Cornell Law School, told Cointelegraph in an email, "The legislation does not make clear that digital assets, other than Bitcoin and Ether, are not securities and are therefore covered by the CUP. It is therefore open to the second under its current leadership to continue to assert that virtually every digital asset is a security, which would be unfortunate." Dougherty also observed, "It is not clear to me that decentralized exchanges are, or are not, intended to be covered by this legislation. The platforms that are covered must be operated by persons, but DEXs have no personnel." The bill enters an already crowded field, joining the SIA and the more recent Loomis Gillibrand Responsible Financial Innovation Act, which was introduced in June. Both bills give the CFTC a larger role in digital asset regulation. Notably, the SIA and the present bill originate in the Congressional Agriculture Committees, which are the bodies with supervisory powers over the CFTC. It is known that Representative Maxine Waters, chair of the House Financial Services Committee, and Representative Patrick McHenry, the committee's ranking member, are also working on crypto-focused legislation. Since the Financial Services Committee shares oversight of the second with the Senate Banking Committee, the Waters-McHenry bill is expected to be more favorable to the second. The Digital Commodities Consumer Protection Act bill will undoubtedly go through revisions as it is considered in Congress. It is unlikely to come up for a vote in the current Congress due to scheduling issues. Bullish rate hike. Why crypto spiked today in the face of bad news? The Fed's attempts to reel inflation in by increasing interest rates are usually associated with a pullback of investment activity across markets. The cryptocurrency markets have been pumping since the announcement of a 75 basis point interest rate hike in the United States, with experts explaining that the markets may have been initially bracing for much worse. On July 27, the price of Bitcoin, BTC, surged around 8% to the mid-$22,500 mark following the Federal Open Markets Committee, FOMC, decision to raise interest rates yet again. Many other top crypto assets surged in price as well, with Ether, ETH, Polkadot, DOT, and Polygon, Matic, all seeing notable double-digit gains over the past 24 hours. Quantum Economics founder and CEO Mati Greenspan on Wednesday jokingly questioned whether this was a bullish rate hike on Twitter. Speaking with Cointelegraph, Greenspan noted that investors were clearly expecting worse and suggested this latest bounce is nothing out of the ordinary. Markets love going up on Fed days, even when their decision is to be tough. Powell is particularly skilled at delivering bad news. Clearly investors were expecting worse. The Fed's attempts to reel inflation in by increasing interest rates are usually associated with a pullback of investment activity across markets. However, there are mixed opinions among the community about whether the latest pump will have enough momentum to sustain upward or if there is a significant retracement on the cards before the market starts to fully recover. Pat Hundle, an analyst at Australian crypto exchange Swift, said that the company was surprised at the exuberance of the reaction to yesterday's rate hike, as the underlying macro landscape still seems up in the air. The Fed is saying one thing and the markets seem to be hearing something else every time we see rate rises. In June, it was the Fed suggesting large rate hikes would be uncommon. This time around it's Jay Powell hinting that the pace of increase might slow. The best gauge of what's to come is the underlying economic data, and for now at least, it does look like some inflationary pressures are easing. With gas prices falling alongside futures prices for staples like corn and wheat, as well as some shipping costs, he added. Hundle went on to note that Swift saw a 100% increase in early trading surrounding the news, indicating that there's clearly a lot of people who see value in the current market prices. The analyst emphasized that a broader bullish or bearish trend will not likely become apparent until the U.S. releases important data relating to the performance of its gross domestic product, GDP, in the coming days, which could signal whether the country is officially in recession or not. The good news is we're not going to have to wait too long to see what happens to the crypto market when any initial volatility washes out. The U.S. is about to release its GDP data, and that's going to be a big stress test. Any negative sentiment here could wipe out recent gains. But if the macro landscape starts to show signs of resilience, we could see the crypto market cap stabilize at the $1 trillion point and rally from there, he added. Inflation punishes the prudent while Bitcoin gives future hope, Jordan Peterson. Author and psychologist Jordan Peterson said that hyperinflation hurts those who are the pillars of society. The ability to save up is an essential tool for self-regulation and planning for the future. But when inflation becomes uncontrollable, those who put in their efforts to delay gratification get punished for their choice. On the other hand, Bitcoin, BTC, does the opposite, according to clinical psychologist Jordan Peterson. In the show called What is Money? Peterson joined the Bitcoin entrepreneur Robert Breedlove to talk about money and discuss the effects of fiat inflation on people who forego instant gratification and how Bitcoin gives hope for the future. According to Peterson, hyperinflation hurts those who are patiently putting in the work and are saving up for the future. He described these people as the pillars of our society, and Peterson argued that these people are vital to the security and survival of civilization. He explained that you want to encourage people to have some faith in the future and make decisions that make the delay of gratification morally laudable and intelligent. Inflation hurts those people. Peterson highlighted that with inflation distorting the market, one of the things that made him interested in Bitcoin is that there are no such distortions or interference. Cryptocurrency enables a free market, according to the psychologist. He further mentions that BTC may be a device that will enable society to adapt to what he describes as the horizon of the future. It's the only bloody device we have. Unless you think central planners are going to manage it. Good luck with that. That's just not going to happen, he said. Peterson dived into Bitcoin in 2019 when he started accepting BTC donations after leaving the subscription platform Patreon because of issues on free speech. The 12 Rules of Life author has also been trying to understand Bitcoin since 2021, inviting BTC proponents to his podcast and exploring more about cryptocurrency. Don't forget to like, subscribe and turn on the notification button so that you won't miss any updates.